the back and forth up and down, that range. The next week we have this much of movement back and forth, and then we leave this previous week's range right there, and we come back down. There's no necessity for it to come all the way down here. Why? It's taking sell side here, it's taking sell side over there, so we leave this previous week's range. So all of this back and forth until we get to this candle here and it closes, this is our only inefficiency. That's why I'm highlighting. So since we traded down to the low of it, it's going to take a lot more to get through this, because this is a balanced price range, and this is the lower portion that's efficiently delivered back and forth. Efficiently delivered meaning that it's multiple candles trading to and fro to a high level and a low level that's overlapping, meaning this candle here, its high and low, is pretty much the same thing as the next one here. Now by itself it means absolutely nothing, but when we have a bias, if we're bullish and we leave that range, this candle doesn't leave it yet, this one does. And then the next candle here, we have an inefficiency. So this becomes a factor for future price delivery. What would it be drawing price to do? Pulling it down. Why? Because the candle here that creates that inefficiency from this candle's high and that candle's low, there's one singular candle that creates the body there. And that's what I'm highlighting, that little blue box. It took from March of this year all the way till now in September before it was repriced to it. What did it do? It provided the back and forth delivery and price action where it only went up here on this time frame. Efficiently delivered price is where the market's going to offer it on the downside. And that's what you're seeing here. Okay, so that's the whole element of redelivery. Not rebalanced yet, it's just been redelivered.